If you take down the purchasing power of the US dollar by 75% without a real move in the gold price, you triple the gold price in dollar terms. And that's precisely what I think is going to happen. By the way, I take no particular pleasure in this. The set of circumstances that causes very strong gold rallies are usually very harmful to the rest of one's life and one's portfolio. And my life is quite good. I would prefer that I didn't have to have this kind of concern, but it's very difficult looking at the arithmetic around on and off balance sheet liabilities in the U.S. and not be concerned about the maintenance of purchase power of the dollar. I mean, sixfold, no, but threefold wouldn't surprise me at all. Here's why. My belief is over the next 10 years that the United States dollar will probably lose about 75% of its purchasing power. I say that because the on-balance sheet liabilities of the U.S. government are in excess of $30 trillion net. But more importantly, the off-balance sheet liabilities of the U.S. government, Social Security, Medicare, Medicaid, federal pensions, military pensions, exceed, according to the Congressional Budget Office, $100 trillion. So the U.S. federal government is $130 trillion behind the eight ball. That's before state and local governments. To put that into context, gross revenues for the U.S. government are $5 trillion a year. So the debt is, 26 times gross revenues before any expenditures? We had a circumstance like this before, although not as dramatic, in the decade of the 70s, and the U.S. dollar lost 75% of its purchasing power. My suspicion is that the way that we deal with all of these entitlement liabilities is that we honor the nominal obligations while we inflate away the net present value. If you take down the purchasing power of the US dollar by 75% without a real move in the gold price, you triple the gold price in dollar terms. And that's precisely what I think is going to happen. By the way, I take no particular pleasure in this. The set of circumstances that causes very strong gold rallies are usually very harmful to the rest of one's life and one's portfolio. And my life is quite good. I would prefer that I didn't have to have this kind of concern, but it's very difficult looking at the arithmetic around on and off balance sheet liabilities in the U.S. and not be concerned about the maintenance of purchase power of the dollar. You could see, as long as you're giving me a reasonable period of time, 5 years or so, I think it could easily go to 9 or 10 or 12. I'm not saying it will, but I'm certainly buying it in anticipation of the deterioration of the purchasing power of the U.S. dollar by really substantial magnitude, 75% decline, like we had in the decade of the 1970s. By the way, that number doesn't come from some cranky old libertarian. That number comes from the Office of Management and Budget. It's a government number, not my number. It's important to remember history, and it's important to remember why history occurred. If you put the arithmetic of U.S. government debt and deficits in the context of history, you have reason to be very, very, very nervous. And in that context, understand that $10,000 gold isn't today's $10,000. It's the $10,000 then. But if you had your choice after 5 years of having $10,000 gold or having had $10,000 drawing 4% interest, clearly you would prefer the former to the latter.
Regarding the U.S. gold reserves, Rick Rule calls for a proper audit by a reputable firm like PricewaterhouseCoopers or KPMG. He believes the American people deserve verification of the presence and ownership of gold. Despite the audit's aim to put rumors to rest, it only temporarily eased skepticism. According to CMI Gold and Silver, one of the oldest gold and silver dealers in the United States, conspiracy theorists believe that the gold is either severely depleted or entirely gone, and that some of the gold bars are fake, made of tungsten coated with gold. While discussing China's gold strategy, Rick explains that due to U.S. dollar weaponization and poor treasury returns, China has no choice but to hold gold. He notes that gold offers a politically neutral store of value and a reliable medium of exchange compared to other currencies. Net purchases of gold by central banks hit 18 tons in January, up from net sales of 3 tons recorded in December, according to data published by the World Gold Council. Emerging market central banks led the accumulation of gold in their reserves, with Uzbekistan, China, and Kazakhstan emerging as the top 3 buyers. Let's get back to the interview.
I think it probably ought to be valued at some number closer to market. I don't think it'll matter as a bondholder if they restate the value of the asset, but you don't have a claim on it. Who cares? Can you imagine me as a U.S. bondholder going up to Washington, D.C. and saying, I'd like my gold, please? I mean, they have an army, right? And if you think about revaluing the gold in the context of $130 trillion in liabilities, the importance of that gold is, it's a hiccup in a windstorm. It really doesn't matter. I personally believe the gold is there, but I don't want to have to believe. We're sitting in Sprott's office right now. The technology for a gold audit is something that Sprott perfected at the beginning of the Sprott Gold and Silver Trust. It's real tough. 1 bar, 2 bar, 3 bar, sample a few bars. I think that there should be an audit of that gold. And I think that there ought to be, in effect, a title opinion. Never mind, is it there? Is it hypothecated? Who does it belong to? Are there claims against it? I'm actually, on this one, probably willing to take the U.S. government's word for it. But I think they owe the American people an explanation. There hasn't been an audit of that gold for 40 years. And I don't mean a theatrical audit. I don't mean that Trump and Musk walking through there with a phone, taking a video of the gold and saying, yep, I petted it. It's all there. That's not what I mean. I mean Pricewaterhouse or KPMG auditing that gold the same way that Sprott's gold is audited. I think if that gold belongs to the American people, that the American people have the right to know, first of all, that the gold is there, and second of all, that it's theirs. That's not asking too much. If you're a central banker, by the way, buying gold is a very hard thing to do, emotionally, because gold calls into question the very premise of central banking. Traditionally, central bankers have preferred to own treasury securities issued by other central banks because it legitimizes central banking. But things changed, as you suggest. The United States decided to weaponize the dollar through the extraterritorial imposition of U.S. will in the SWIFT banking system, and then, of course, by, irrespective of your belief in U.S. foreign policy, by stealing $300 billion worth of Russian gold. I think that in particular China, given the size of the economy and the importance of exports to the Chinese economy, has no choice but to go to gold. They look at the U.S. government as one that they are in a period of increased conflict with, and they look at the predisposition of the U.S. government to weaponize the world's reserve currency. And they also look at the U.S. 10-year Treasury paying 4% in a currency where, from their point of view, the purchasing power is declining by 7.5%. And they say, now, wait a minute, we're giving seigniorage to the U.S. government who doesn't like us, and we're losing 350 basis points of real yield a year. This is a bad deal politically, and it's a lousy deal arithmetically. Against that, you look at any other currency they can trade in. Just how many rubles would the Chinese like, right? The answer is not very many. They're going to go to the BRICS currencies. I mean, none of the underlying currencies behind the BRICS are convertible. Why would the Chinese do that? The truth is now, when China gets rubles, what they do functionally is they turn them into dollars. They have no choice but to hold gold because there isn't another asset class that is simultaneously an asset and a medium of exchange other than gold and the U.S. dollar. And the U.S. dollar has proven itself to be a less reliable store of value and an increasingly politically challenged medium of exchange.
Throughout history, gold and silver have maintained